Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Saturday Brunch. Today we're exploring a smorgasbord of oil, gas and energy stocks with Malcolm Graham Wood in the review of Malcy's bouquet list. No, that's not his favourite flowers. This is top 12 picks in their energy sector of 2023. Welcome, Malcy. Is it too late to say Happy New Year?
Don't think so. Might as well. Same to you.
Same to you. So any resolutions or goals set for 2023 yourself?
I've got to get a bit more efficient, actually. The bucket list is a perfect example. When it first started, it was absolutely brilliant because a leading fund manager who knew nothing about oil and gas, but was a really expert in everything else, including mining, came to me in the sort of 14, 15, 16, and said, the oil market is absolutely shot to pieces. But it is like a commodity like mining, which I know all about. And I would know that I would put together a list of stocks for mining if this was happening, and one day they'd come good. So he said, can you make me a bucket list of oil and gas stocks? And it was the best thing we ever did because, we came out of that oil price fall and the shares absolutely raced up. So it's become an annual thing ever since. But what it does need to be, in terms of my sort of, trying to be a bit more clever about it, is it drifts. People then start to wait for the new one. And then are you going to do an interim one? And what's the performance been like of everything else? I'm a one-man band. I can't do everything all at the same time. But so what I'm going to do is I am going to tighten it up a bit. But it's always been a calendar year thing, just at the end of the year. Where are we in terms of who's done well and who hasn't, who's in and who's out? I'll probably try and make it quarterly so that we can, because, for example, the people that left, some of them left quite early last year, and then some of them are leaving right at the end. So, you can't just do a complete broad brush sort of year in one.
Sure. You actually just answered the first question I had, which was obviously, do you want to tell the listeners just exactly what you look for? I guess you've answered a bit more about the background of what why the list started, but do you want to just go through what you look for in a company and what sort of criteria that these stocks should meet?
Yeah. Now, the first thing that sometimes differs from my views to maybe some of the retail investors is that training over the years has meant that I make these are meant to be longer term calls. All these guys who do trading and everything else, they know everything about this way better than me. In fact, I would say that, I've been in the industry for 40 odd years now, and I spent most of the 80s talking to, leading fund managers who all had, even at the sort of Morgan Grenfell's, the Warburgs, the Legals and Scottish Amicable and Widows, and they all had really, really top quality fund managers covering the oil and gas sector. Right now, I reckon that, first of all, hardly any of these big fund management organizations know anything about oil. They don't want to know anything about oil because it's not, ESG isn't trendy. And as a result, they've had their trousers taken down and their backsides whipped last year as the energy sector, particularly in the States where you had, Chevron, Conoco, Devon, all doing enormously well. And so these guys underperformed. The point I wanted to make is that most retail investors I speak to know more about the oil and gas sector than pretty much any fund manager I've spoken to. Now, some of the fund managers do know a lot, but these guys have got the money on on a day-to-day basis trading the stocks, so they're way better at doing that than I could be. But all I try to do is to identify where there are really good quality stocks with inherently strong. They have to have strong managements, preferably they have to have strong finances, so that when the operator comes calling and says we're going to drill a hole and you've got 3 weeks to produce the money, your share of the money, they can do it, or they don't have to have a rescue rights issue or a raise or anything like that. And so good management, strong finances. There are people that slip through the net, and they always will do. But on the other hand, if you look at the stocks that are in the list, they are completely varied. The list of performance, outperformance, or how much they've gone up and so on, isn't adjusted for every single raise that everyone's done. So it's only guidance. But the interesting thing about the list is that the the winners and losers all come from completely different parts of the world and doing different things in different places. And there's one other thing I'd like to point out is that if you look at the commodity price, in terms of oil, it started the year at $80. It got to about $130 in March when the Russians moved in. It came back a bit, and then it had another rally into June. And it's done, when you see it, when it comes out today, there's a big chart there, and it's done nothing but fall ever since the summer.
Yeah, it's
so oil company
around about the 80 mark now, isn't it?
Yeah, so it's ended at the year exactly the same, almost exactly. Say $4 higher than it was at the end of last year. And so oil companies, can be forgiven for saying, no wonder the share prices have come down in the second half because the oil price has. If you look at the gas price, the natural gas price, that was rubbish, and it is, first of all, yes, it's gone everywhere. But secondly, I think, and more importantly, is that 2 years ago when someone like IOG were looking at their southern North Sea gas basin economics, they were working on something like 45 or 50p a therm. Now, at one stage in the second quarter of this year or whatever, you got to about 400 or 500p a therm. Now it's come back to 180 now. People say, oh no, it's awful for the gas companies. 180 is still over 4 times what they did the economics on all those fields. So, so Serica, Kistos, IOG, those sort of companies which were absolutely blazing because the gas price was doing well, have come off in the second part of the year. But if you look at the 2-year strip for gas prices, it's very friendly indeed.
So should we take a look at the last year's list, the 2022 list, and do you want to just go through, take us through the top 5 performers?
Okay, well, it won't surprise you, having said what I just had, is that they are all different. But the winner was Chariot. Chariot is one which I've always said since the new management took over is a multi-bagger. I always said that I didn't choose Chariot as one of my prime picks in the sector because it was going to go up 5 or 10%. I picked it up because I think it's going to go up 10 times. Now, it was up 140 odd percent last year, which made it the best performer. Could have been a bit higher. Like a lot of these were higher during the year. These stocks, most have fallen quite sharply in the third and fourth quarters. But Chariot has still got massive upside. And this is really interesting, is Union Jack oil. Now, we talked about Wrestle, which has been, one of the key things. The interesting thing for Union Jack is that Wrestle has produced a huge amount of revenue. It's given them the ability to come back into the dividend list and start buying back the shares. But the shares at the moment are like 30 odd p. Well, over 50p at one stage, how much upside there is. And they've also got, so where we probably weren't expecting Wrestle to be the big winner for Union Jack this year, it's reduced the revenue that can do all those things on the dividend front. Sure. Whereas they've still got something like West Newton, which people would have thought would have been the major upside.
That was still the disappointment. Wasn't the disappointment from the Egdon something to do with the aqueous, something to do with the aqueous fluids at that well?
But the thing about, to be honest, when you look at West Newton, I think they would all own up to the fact that they didn't drill it particularly well the very first time they approached it. And that's partly because most people thought it was going to be a gas discovery, and it turned out that there's liquids in there as well. And I think them and Rearbold would probably admit that they would like to, and they will be reassessing it in the next few months. So, but West Newton is huge. It's bigger than Wrestle and will be much more important than Wrestle. But there are other companies, for example, where Wrestle has helped, like Europa or Egdon, so there is. So there we are. That was Union Jack went from 13 to 30, having been 50. So already we've got a Morocco stock, we've got a UK onshore stock. The third biggest one is Petrotal. Petrotal, absolutely massive favourite of mine. Petrotal is in Peru, so we're in deep countryside in Peru, but it's a brilliantly run company. The costs of extracting are still quite low. It has its own complications, such as getting the crude out. The routes out are to do it locally through a MP pumping line, but they've now added a route through to Brazil, which gives them an alternative. They've got locals, which you would expect in South America, often sort of shut the place down temporarily but they've sorted that out. basically they've gone from ability to have a capacity of 5,000 barrels a day. They never got
20,
capacity of 20,000 barrels a day. And the guy who runs it, and the finance director as well, but the guy who runs it, Manolo, is one of the best people I've ever seen running an oil company. So Petrotel third, and that did very well. That was up 100% last year, give or take. And then we have one or two interesting ones. I mean, Predator, which is a real Marmite stock in the marketplace, has come in fourth position. That's because they are just about to drill the second well, we're going back into Morocco. Paul Griffiths, who runs this company, he's a very good runner of an oil company, and he's always, or a gas company, he's always said to me, and he's a good guy, we will discover a huge amount of gas onshore Morocco. Morocco is one of the best markets in the world. It's naturally short of gas, so the price is good. They've got the best fiscal policy pretty much I've ever seen. You get 10 years break for paying any taxes. And the market is huge because the onshore market in Morocco can pretty much, whatever you produce, you can sell into the local market. But also they've got a pipeline into Europe through Spain. And when Algeria stopped selling them any gas, that pipeline has become very important.
I thought that they may have risen a bit more into the spud of the MOU too well, to be honest. I think it's been quite muted, the reaction there, hasn't it, really, from what I've seen anyway.
I couldn't express it better. I think that, if things were going to go wrong with Predator, I would say it's because the MOU too well, which is, I would have thought, I'm expecting that any minute now, to be honest.
Yeah, exactly. And the other thing about them, they're not a one-trick pony because they've got the Magmel FSRU project concept in Ireland, which was validated earlier, sort of the back end of last year, which was I thought was excellent news.
That is absolutely brilliant, but way longer term, a bit like Europa. But the Irish government has for the last few years just put a cap over its head and said we're going green and we're not going to buy any crude oil or anything else, and that will be the end of it, without absolutely realizing, like a lot of people realize down the road, is that however much you want renewables to run, how green you want to be, it ain't going to happen in the foreseeable future. We'll still be having fossil fuels, whether you like it or whether you don't. Which is why, OPEC is still going to be important until 2050. But so the bottom line for that is, of course, is that Predator stays in there. I mean, it caused me a huge amount of angst, this one, as to whether to keep it in or not. You've made 100% on the year. That doesn't include several raises, to be fair, but it's not up to me to try and work out the dilution for every shareholder. And if this well doesn't come in, it won't be up 100% anymore. But, they are sorting out the problem in Trinidad. And if it comes in, the stock will be cheap. And the point is that, as I pointed out last year and the year before, is that the bucket list is meant to be a wider spread of investments across the sector and with appropriate risk. So we've got these UK stocks like Serica and Jersey and so on, who are really powerful for the longer term. And you've got things like Predator, where they're drilling MOU2, which, could change. It was like this time last year, it was Bahamas Petroleum. Do you remember them? They had a huge well in the Bahamas, which would have made out like a bandit, but didn't come in. So
the name change, wasn't the name changed to Challenger from BP?
Challenger now, yeah. And the new guy he's running it is he's an Aussie guy, absolutely smart as can be. You watch Aiton Uliel at Challenger, and he'll be doing stuff.
Yeah, Malcy, what would happen to Predator if that gas find happens? The MOU2 in
if MOU2 comes in, the point is that these stocks never do. You would expect them to multiply by 5, but of course they won't, because there are a shed load of retail people in there waiting for this to come in. If it goes up by 2, they'll all be sellers. Yeah. But actually, if it does come in and they've got a very, very successful and sizable discovery, it'll do very well. The share price to look at, if that happens, is Touchstone, who are also in the West Indies, also in Trinidad. A couple of years ago, they made an absolutely monster onshore discovery, which will make them rich for many, many years. But the shareholders exited the company, stage left when it happened, And even though over the last years they've started to rebuild and they've got gas coming in at Coho, they'll have a huge amount of gas coming in this year from Cascadura. The market haven't quite yet worked out how valuable Touchstone is. So Touchstone is like 14th in the list, I see, and I think Touchstone could easily be at the top of the list this time next year, or maybe even towards the end of the year when all that production from their stuff comes in, and people suddenly realise that they're travelling, as they say, is sometimes better than arriving.
Yes, this is the best part.
Yeah,
so
absolutely.
one that I notice is not in the new list. Obviously, we'll come on to that in a minute. Is and it performed exceedingly well, I think, for the last 2 years. Was Kistos? Do you want to tell us a little bit about what's happening there?
Well, Kistos is on the list. Yeah, I think it was the best performer or joint best performer last year. Because the major acquisitions that came in, Kistos would be right at the top of any list of stocks. If I was allowed to invest, which, as you know, I'm not, I would have Kistos absolutely right at the top of the list. And the reason for that is that I think Andrew Austin is amongst the best CEOs in the business, and he keeps doing accretive deal after accretive deal. But the reason that Kistos is its performance hasn't been brilliant. It's still up on the year for two reasons. One is that gas price that I talked about, and half of their business is the Dutch TTF gas, which has come down. And the reason, and the other, so the gas prices have come down, that they'll go back up again. And the other reason, of course, is the taxation. We don't talk about it very often because it's boring. But actually, in Holland, in the Netherlands, have initially attempting to put a massive tax on energy companies, which would make some of their most recent Dutch acquisition, hardly worth it. There's still some very good. It's still very good, but it just wouldn't be the upside. I've heard that Exxon might be challenging that in the courts, and the tax thing is not. I don't think it's EU approved either. So I think that will happen. And of course, the UK. Mustn't forget that halfway through the UK, we have yet another windfall tax, and as a result of that, there are fewer chances, opportunities to invest in the UK without knowing that you're going to get clobbered by tax. So, ironically, if you compare the UK to Morocco, for example, it's we would be booted into touch because our fiscal policy is pretty appalling. It's not encouraging medium or long-term investment. But Kistos would be absolutely one of the best stocks in the sector by a mile. I don't know how long you keep going on for, but Wentworth.
Let's go to number 5, Wentworth.
Yeah, and of course Wentworth is leaving subject to the bid, but Wentworth is leaving the bucket list because the shares have over 50% this year because they've got a bid on the table, 32.5p. I wrote quite a long piece on Wentworth yesterday because there are some people in the retail environment who feel that Wentworth are being taken out on the cheap, which I can tell you is not the case. The position about that bit is that the people don't realise that some way through this year, the costs at Malcy Bay are going to be realigned. Wentworth aren't the operator. Morel and Prom, who are doing the bidding for them, are the operator, and I would expect them to put the costs up quite dramatically. So all of a sudden, in the last 2 years, the great thing about Wentworth has been that they've been paying a decent dividend, which yields 8%. They've been buying back shares in the market as well. So they've got cash coming off Malcy Bay in Tanzania, giving them the opportunity to pay out and then buy the shares back in. But it doesn't add up to enough to say that, once the costs are restructured this year, you might find that Wentworth haven't got the cash flow as much as they have in the last 2 years, while they pay high costs, and therefore the fact that they've got big buybacks and 8% yield suddenly takes it away. So, there are companies in there, which you should look at for a bang solid, 5, 10, even 15% yield, which, investors should bear in mind. I put yield stocks in there as a separate sector almost because you've got diversified energy, which is yielding 12%, and their model in the States is absolutely fantastic, and they will make money whatever happens to the gas price, because it's primarily gas in the States. They will do it longer than I shall live, and probably longer than most others. they could shut the business down today and pay a 12% dividend for the next 10 years and still have money to pay out, whopping great. So, I mean, they've got dividend. Gunnell have got got huge cash flow coming off their operations and paid substantial dividends. And in due course, San Leon, which is another sort of Marmite stock, but they're still in Africa, in Nigeria. When it comes off, it will pay a massive amount into San Leon. And Ocean Fanning is on record to say he will be paying back a huge amount to shareholders. So I got them as a potential 20% yielder.
That leads us on to the ones that have left the bucket list. Obviously, Wentworth being one of them, obviously, because I bid.
Yeah,
and it looks like they're going to be bought out. So let's look at the ones you've replaced.
Wentworth has gone. I mean, I'm assuming the bid will go through. If it doesn't, we'll have to have a reassessment. The great thing about the bucket list is that we can reassess at any time. And Savannah is suspended at the moment because of the deals it's doing in Chad and so on. And a bit like San Leon, when that comes back in, it'll reappear subject to the deals and so on. And of course, the others that have gone, they speak for themselves right at the beginning of the advance. We're drilling a well, the Buffalo well, which had an 85% chance of success and came in dry, which doesn't happen very often, but that had to go. Orcadian, suddenly we thought it was going to be bringing its interesting prospects into the marketplace last year. All of a sudden it pushed everything back, so there's no point in having them in. So, to say, we lost 5 stocks this year for varying reasons, and we have three new ones. The bucket list doesn't have to be 20 stocks all the time, so for this year it'll be 17, I think it is, and we have 3 new ones. So Arrow and Southern and Afentra are, I think, the 3 which have been knocking on the door the best of all. So Afentra, first of all, because it's in Africa, actually made an announcement yesterday saying that the Angola deal is pretty much all signed and sealed. They just wait. They've now got the ministerial approvals that they were expecting. So that deal's going to go through. And I think they've got 2 or 3 more deals. I think that Paul McDade, who, if you remember, is ex-Tullow, but also he's now running Afentra, is very, very smart. He's ambitious. There's nobody who knows that part of Africa better than him. I think there's more deals. There's more deals probably in Angola. There's more deals elsewhere. It's an opportunity to be in at the start. So Afentra makes the list easily.
What price is Afentra going in the market? What sort of market caps go and the price? Just it's good for the listener to.
So Afentra is 62.5 million market cap at the moment.
Yeah, and I think it could be. It will be a lot higher than that in due course. I mean, a lot higher. And the management are buying in stock, the cash with their money, which is what I like to see.
Yeah. And
then we've got Southern, which is US onshore, primarily gas, and has got another good team of a good leadership team. I think that when I look at the acreage there's so much upside. It is not true. And Southern Energy is bringing on that acreage bit by bit. There's lots more to come. They've got profits locked in, not massively hedged, but where they needed to, are doing very well. So I can see, a pretty decent upside at Southern, whichever way it goes. And of course, the other one I've been talking about for a while is Arrow. So Arrow started life as a Canadian business, and it's still got a portfolio of Canadian stuff, but it is particularly in Colombia, which is an area I know pretty well because I've looked at one or two of the Colombian plays quite a lot over the years. They have got production coming on stream left, right, and centre. So they will be increasing production. That's good. They get good prices. As I say, the management absolutely first rate. I think that they'll be back over in the UK in the next month or so, talking through how the portfolio has gone. But I just basically think that in this case, you've got plenty of upside, pretty much locked in because where you see in 2 or 3 different parts of Colombia, wells coming in, either new wells or workover wells, or where existing production is just being increased. In addition to that, they've got a lot of exploration upside. So, those companies are looking in good nick.
Is there any countries you won't invest in? Because obviously Colombia is quite an interesting country in terms of politics and stability. I mean, is there any countries you tend not to look for or wouldn't invest in?
Never rule anything out per se, although in some cases it's more difficult to take money out of, for example, or some people would say that you wouldn't want to be too involved in Nigeria, but in fact, the plays in Nigeria that are work very well, like San Leon, and Andrew Knott at Savannah's is building a substantial business and is producing the power for about 20% of Nigeria, as far as I can gather. But the point is, if you look, I mean, you mentioned Colombia. If you take some of these, you take South American regimes as such. Peru, for example, voted in a new, very left-wing, sort of almost communist president a few months ago. And on his ticket, he said, I'm going to close down the oil and gas business. We're going to go green. Well, two things have happened since then. First of all, when he got his feet behind the desk, he realized how much tax, in fact, almost entirely the whole tax system of Peru was based on oil and gas. And the same is happening in places like Colombia and so on. And they just realized that they have to go with it for the time being. Now, the president of Peru is no longer the president of Peru, and he's already been moved on. It depends. Britain is a far worse fiscal player than most of the countries in South America, and elsewhere you have to look at it on a place-by-place basis. But it's difficult in Kazakhstan and Russia and so on at the moment, as you might expect. But to be frank, all you have to do is try and tick the boxes. And if there's a country which is seriously trying to, needs the money from its energy exports that much, they'll do whatever the oil companies need them to do to a certain extent. And then you get places where, like Guyana, which didn't have any oil. This is a tiny place. And Exxon are producing hundreds of thousands of barrels a day out of there at the moment. And, they just need to make sure they get that right.
So the question, if you were a betting man, then Malcy, what on your list do you see has the best chance of, exponential share price returns? I mean, I remember looking at these lists a few years ago, and you had 2, 3, 4 with 500%, 600%. Yeah.
Those are the lists I told you about immediately after Adrian Collins, who asked me to devise the list. We just got lucky because I remember Premier being, up 500% and various things. But the answer to your question is, if you want to know the biggest winners, they will be, by the very nature, the people who have a really big discovery. So, 2 years ago, it was Touchstone when they absolutely rocketed. But they're just, getting themselves back together again now. Predator, you were asking about earlier on. If that MOU2 well comes in, I mean, it is absolutely mind-blowing what the upside could be, and therefore, you'll be saying for a long time, Predator were in the bucket list, a shade under 10p. And the well came in.
Do you think there'll be hysteria like we saw with Sound Energy when they hit with Chandrara and their discoveries?
I'll tell you what, I thought very long and hard about putting Sound into the mix this year, and the only reason it's not is because I'm going to be more disciplined and do a quarterly analysis, because Graham Lyon is doing all the right things at Sound. It's just taking him a while to get it all sorted. He's not doing anything. It has to be built from the base up. But as you know, I know that business inside out, and Chandrara is a very, very good asset. And when he finalizes the MLNG and the other bits and pieces, and will come out of this a way stronger beast than it ever was before. People always think about going back to the James Parsons age and when things were, but it's a different business now. But yeah, I think Sound is a cracking business, and at some stage it'll come into the blog. But other ones, as I said, Kistos, be right up there, because I'm convinced that, I mean, one of the great things about Kistos and Andrew Austin is that, he owns the business as much as anybody else. So he's put his own money into it, like he did with Rockrest.
Yeah.
So he owns, I don't know, 15, 20% of the business. It is his absolutely determination to make deals that make shareholders lots and lots of money.
Yeah.
And if that includes him, all the better.
Yeah, I mean, he's done it with a few. Was it Red Rock or Red Rose?
Rock Rose. Yeah, I mean, but the point is that he doesn't muck about. He doesn't say, we'll have options, or will the shareholders, or the this, that, and the other, or say we'll do deals and we'll pay it out. And if that includes me, then all the better. And if it includes the rest of the shareholders, which is why the shareholders at Kistos and Rock Rose love him.
Sure.
Because he wants to make the shareholders lots of money, period.
Absolutely. There's one that's not on the list, which I was a bit surprised, and it actually won the AIM Blue Ribbon Award, I believe, from Proactive. It's Prospects Energy. We actually saw Mark Ralph last night. He was presenting in London. They've obviously got the El Romeral concessions and the Selva fields in Italy. What are your thoughts on that? They've had a very good performance over the last year, and they're looking towards first gas in Q1 of Q2 of this year now. So what are your thoughts on that? Have you come across this company before?
I know it very well. I know Mark Ralph very well from the old days, and he is a very, very solid oil and gas man. I know him extremely well. I considered prospects for this bucket list, probably partly because, as you said, the share price has already gone up quite a long way, and which would say that I missed it this time last year. But then, this time last year he wasn't running it. It was a different business.
Yeah.
And also, he's got Spain and Italy, and the bottom line is that I've always been very suspicious of Italy. I should have probably said to Kevin just a minute ago, which is the worst company in the world to invest in? Well, New Zealand, but Italy comes a close second, because you can't get anything, or India, you can't get anything done. A thing that would take you a year to do will take you 10 years.
Absolutely.
There's all sorts of things that you shouldn't be asking about in terms of how you get licenses. The fact that Prospects had a Italian portfolio worried me, because it takes ages to get anything. But when you do get it, eventually, I mean, it's just, you might get something which takes 10 years, which would take a year somewhere else. Yeah. When you do get something, it obviously works. But on the other hand, you can't,
the thing with the company is El Romeral is one of only 3 onshore gas deposits currently in Spain. So that in itself is a feat, really, for the company. And obviously, as you say, I think if they get this Tesorillo permit, I think there was an application to convert to an exploitation concession, which was submitted in May 2021. But if they get that, it's an absolute game changer for the company.
Yeah, I would think that it's potentially there. I haven't seen Mark for a little while, but I'm sure if we reach out to each other, we'll, and things change. It just, it caught up with events pretty quickly, to be honest, but just not made the list for the time being.
Yeah. There's an interesting thing going on as well with Warrego as well at the moment. There's almost a bidding part for the other half, because they're 49% and Warrego around 50%. And he was talking about last night, saying that potentially it could go to bidding war and things like that. So it'd be interesting to see who potentially comes on as the partner. I think potentially could be a much bigger name than Warrego. So it's quite exciting at the moment, that stock.
It's good. It's got lots going on at the moment, no doubt about it. The fact that they managed to get the licenses and sort out in Italy have been good, but they've been waiting for them for 10 years to happen. So.
Yeah, I mean, there's both political, financial issues in this market, but what I see in the market is that we are moving more towards gas than oil, and maybe that's wrong, but that's the way it seems, and not just because of the gas price, just because it's seen as a greener alternative than the oil itself. But were there any stocks that really, very much could have made it, but just didn't this time around? What stocks are on the horizon, if you like?
Well, yeah, I mean, briefly you mentioned gas v oil, and I think that it's quite interesting that gas is without doubt the transition fuel of the future. So it's greener and cleaner than oil, and therefore it will be more important. But on the other hand, if you look at Serica, for example, up till the time that it just made that recent acquisition, it was 90% gas. And one of the reasons they've made the acquisition is because they don't want to be so committed to gas and as you say, the ups and downs nature of the gas price, because it's had the run and oil has come back a bit. Now it'll probably turn around a bit, but no. So Serica is suddenly, for a big, highly rated company with another really good management, Serica are, quietly making a very substantial acquisition. They were a bit committed to Bruce, which is obviously a big field and doing very well. But if anything went wrong with that, they'd be in some trouble. So they need to diversify. And so they diversified. So they're not just gas and they're into oil. As for other companies on the wait list, yeah, I mean, I've probably got 10 or 15 companies that are looking interesting. You've mentioned Europa. I'm scheduled to see them soon. I don't think that it's going to happen straight away because of the Irish acreage. Challenger we talked about with, because it used to be Bahamas Petroleum, and Eitan Uliel, the CEO there, is doing great things, and he's actually managed to get ahead of the international majors in Uruguay. So doing pretty well there, and they will come on at some stage. There are a whole bunch of companies which either need to firm up their assets. I mean, there are plenty around who might be bucket list plays in the next few months.
Contenders. Okay,
Yeah.
so our final question, because it wouldn't be a bucket list with you, Malcy, if we didn't ask the question. BP, Shell, what are you thinking? Other than you don't like either of them at the minute, maybe.
Don't come into my sort of radar screen as such because they're the majors. But the bottom line is that the BP management has been absolutely atrocious for 25 years. I don't think that's changed very much. I mean, if it hadn't been for the comments from the CEO of BP, we might never have had a windfall tax in the first place, because he was the one who said the North Sea is like a cash machine, which of course it isn't, because you have to build the cash machine at a cost of billions and billions of dollars. They are trying to put their ship in order by putting huge amount of money into renewables, in particular solar and so on. But they have a very substantial dividend commitment. And so, as always with BP, you have to temper the dividend commitment with the cash flow. It works at the moment. You can tinker with BP enough to make it work for the longer term. It's not as well managed as Shell, but we've got a new management team coming in at Shell as well, who have a better portfolio than anybody else. But historically, I have to say that last year was the first time that I was telling people that investments in Chevron and Conoco and Exxon were probably, I would rather be in them than in the UK-based majors. The management in the States is way better than anything that Shell or BP can do at the moment. And as I say, BP's been a national disgrace management-wise for 20 years.
And Shell must have benefited from switching a significant amount of production to gas in the last 12 months, you would imagine.
It's not way longer than that, Kevin, to be honest, because it's when they took over BG.
What I mean is, because of the gas price increase over the last year, that's obviously going to have a knock-on in the coming.
Yeah, I mean,
in the coming quarters.
It's massive. It was, at the time, it was only one of the few things I did call that right, because I thought that buying BG, whilst a really, really big mouthful at a very, very difficult time, was probably against every business school regulation or model that you've ever seen in your life. But businesses like BG don't come along any more than once in a lifetime. So in my view, they had to do it. And it has turned out right for them, because of course, not only have they got the gas portfolio, but of course they got the LNG. And we've gone through nearly an hour of talking about it without talking about the fact that where are we going to get our gas supplies from without Russia? And, we are going to end up with some through a pipeline from Norway and an awful lot in a LNG from Qatar and from the West Coast, the East Coast of the USA, and in a number of other areas. But, no one's ever said to me, is LNG particularly green friendly? When you're freezing it down to X and putting it in huge tankers, taking these huge tankers halfway around the world from, Qatar to, no, it's not. And, the business is owned, the LNG business is owned, quite a lot of it is owned by people in the Middle East, who you wouldn't want to have a World Cup in. Oh, sorry.
Oh, political sport comment.
The Russia situation has made us realise that we do use a lot of gas. The price has been tremendously high, although like everything else, it's come off a bit this year. But we've got to make sure that we know where it's coming from. And I think that, interestingly, LNG from the States, which continues to improve, is going to be highly valued.
Good. Well, on that note, I think we'll wrap things up, and it's been good to talk. I think we've done the best part of 45 minutes there, so plenty of material.
Well, it's been great to speak to you guys, and as always, I'm always here. If I'll be trying to do it more than once a year this time.
Absolutely.
We look forward to speaking to you in 3 months. Then, if you're going to do it in April again,
that's my plan. So
we'll keep you honest, and we'll try and do it 3 times this year, and keep the people updated, because I think that would be useful for everybody.
Nice to speak to you.
All the best.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.